Hello, traders. It's Tuesday, April 5th. We're about 3 hours into trading. Let's get right to it. Amazon was my last pick. Not one of my better picks. The trade still worked out, but stock has been a little bit on the weak side. The market has been weak. We're going to take a look at that in a second, but the video came out last week, 4 days ago. I believe it was Thursday or Friday. I suggested selling the 3240 32.35 bullish put spread for a $1 credit. And you can see that the stock got pretty close to the 100-day moving average. That's what we were leaning on. I'm going to click the alert button right here. And you can see the stock never did get below the 100-day moving average. It never did get below the 32.40 level. I think it was about $6 out of the money on Friday. It expired worthless. Again, not my best pick, but I did suggest doing a bullish put spread for a reason. That reason was that I suspected we were going to see some market selling somewhere along the way. This type of trade was going to give us the cushion that we needed. 25% winner. You get a $1 credit on a 5-point spread, $5 between the strike prices. That is $4 that you have to put up in margin. You received one divided by 4, 25%. So nice. Again, not my best pick. You can see that Amazon is back below the 200-day moving average. The market is currently challenging the 100-day moving average. So we're going to take a look at that. And this is a critical juncture for the market. I am leaning bearish today. Market can go in either direction as far as I'm concerned. So I'm not swing trading, at least not for the moment, until I see us have a nice pullback and establish firm support. So let's get to the pick of the day right now. I'm going to go into my heavy selling and I'm going to go right into GM. I like GM. I think this is going to be a really nice bearish pick. I think it's good for a day trade. I think it also works for a swing trade. There's an upward sloping trend line right there. You can see how it's been violated to the downside, was not able to get through the 50-day moving average. It has been weak when the market has been strong. That is relative weakness, and we can pick that up by looking at the 1OSI indicator. Orange line below zero, relative weakness. That's the key to all of these trades. That's why they keep working time in and time out. So for those of you who just want to review the previous pick, just want to see the new pick, there it is. I'm going to continue in just a second. Okay, so let's take a look at what the market is doing currently. Why have I turned bearish? Well, going into the day, things didn't look so bad. Sorry about that. We have a alert here that was just triggered, and there's a tiny little stock I've been tracking, and nothing for us to get excited about. Let's go back into the market. We had a drop on the open. Now, given the strength that we've seen the last few days, I'd mentioned to members, I think we're probably going to see a decent little pop in here, but you've got to be careful. We've got the ISM services number coming out at 9 o'clock. It came out here, but that was not what spooked the market. There was some Fed speak, got everyone excited. Really wasn't anything new as far as I'm concerned. They talked about having to reduce their balance sheet at an accelerated pace. That news has already been out there. We knew that. In fact, not just Bullard, but a number of other Fed officials have said we may have to raise 50 points in May. We may have to raise 50 points at the meeting after that. Now, that is pretty aggressive tightening. This is not new news, it's been out there. So, right now, we had a juncture for the market where we had this beautiful rally. This is where the last FOMC statement came out. Look what the market has done since that 25-point basis rate hike. Not what everyone expected. It was a relief rally. Whew. All right, well, we got that out of the way. The problem is 25 basis points not going to make a whole lot of difference, especially since interest rates are still at historic lows. But you start adding another 50 basis points and another 50 basis points on top of that in just a few months, now all of a sudden that starts to matter big time. But we're at a juncture right here where we had the 100-day moving average, had this nice rally above it. Okay, so we fell below it. Then what happened? The next day, We almost got to the 200-day moving average, but buyers came in a big way, and that day finished with a bullish hammer that closed right at the 100-day moving average. So this is the selling that I had alluded to in the Amazon trade. We needed to give ourselves some cushion. So we rested right at the 100-day moving average. Then yesterday, Monday, here we go. We're going to build on that bullish hammer right there. And looky here, folks, we may have a bullish flag formation. So if I connect these two candles, you can see the downward sloping trend line, and we had a couple of different scenarios that could play out. If we built onto yesterday's green bar, we would have had a nice long green candle like this, and we would have had that bullish flag formation, and we probably would have taken out that high. That was one scenario that could have played out. Again, this is a very critical juncture. Today is a critical day for the market. The other scenario that could have played out was that that downtrend line is tested and it holds, just like it did today. And now we have a bearish hammer forming. We're testing the 200-day moving average. If we close below that 100-day moving average today, we are going to test the 200-day moving average. What happens there? I don't know. I only know that if we close below the 100-day, you have to be positioned to the short side, because yes, we could test it and we could fall back through, eventually establishing a higher low and an upward sloping trend line. Do we stop here? Do we stop here? Do we stop here? I don't know, and I won't know until I see the price action. If I start seeing long red candles stacked, that's going to be a sign of very heavy selling and strong downward momentum. So I'm going to evaluate the price action, but if we close below the 100-day moving average today, Tuesday, I am going to take a small overnight bearish position. Well, why small? Well, the market's been all over the place. It's been really hard to swing trade. And if you take a look at the candles, almost every one of these candles has retracement and overlap with the previous candle. What does that mean? That means that I don't have to buy right here at the close, because I'm going to be able to buy sometime during the next day. I don't have to be long here overnight and have that overnight risk exposure, because I'm going to get a chance to buy at a better price the next day. So the same thing holds true on the short side. I don't have to short right here overnight, because I'm probably going to get a little bit of a bounce and I'll be able to short the next day. So I would keep my shorts fairly small on a swing trading basis. Yes, if we close below the 100-day moving average, you can have some short positions on. Take a look at the 5-minute chart and see what's cooking here. We had this bounce right in here, actually got pretty well into this red candle, and it lasted for about an hour. But then all of a sudden, we started to see prices deteriorate. And when we took out the low of the day, this was not simply to shake out buyers and to trigger sell stops. When you start getting follow through like this, then you know that this is legitimate selling, and we're continuing to drift lower. Right now, we are resting right at the 100-day moving average. That is your key. And sellers want to see us knock through that right away. Not a very long pause. Buyers would like to see us spend a lot of time there and eventually bounce off of it today. This is fairly decent selling momentum. We've seen the longest candles on the downside. I think we're probably going to poke through that 100-day moving average and close below it. Pretty big news coming out tomorrow. We have the FOMC minutes. They'll be released tomorrow afternoon. Good chance that tomorrow, until those FOMC minutes are released, it's going to be fairly dull trading. Everybody's going to want to see how the Fed officials are positioned and where their bias is. And then when that news comes out, we'll see what the market does from there. But right now, I think the market's run up pretty far after that FOMC statement, and we could see some additional selling pressure. So that's kind of what I'm looking at right now. That's why I took a bearish position in GM. I like it for a day trade. Let's take a look at the stock one more time, see what it's doing. We want to see that relative weakness maintained. So if you're looking for an entry point, On a stock like this, you want to wait for that bounce to run its course, because on the short side, we're always going to get some bounces. And now we're starting to see the stock roll over. So I like this. I think this is a pretty good area to be short. If you get another leg lower in the market, you want to see GM, not inch, 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 tick, tick, tick down to that support level. You'd like to see some nice, substantial red candles, and you'd like it to take out that low of the day with ease. Then you know that there's still a lot of selling pressure in it. Overnight, yes, GM tends to make a lot of its moves right on the opening, like it did today. And so for an overnight, yes, I think it works also. Take your cue off of the SPY, market first, market first, market first. So, gee, Pete told me he likes GM short. Oh, I really want to buy some puts. I'm going to go out and buy them right now. No, that's not how you should be trading it. See how the day unfolds. See if the market closes below the 100-day moving average. Hey, Pete told me that if the market closes below the 100-day moving average, that I should probably take an overnight short. And it did. Huh, good. What did General Motors do? Hey, General Motors closed on its low of the day, so it is preserving its relative weakness. Yes, that would be a condition for taking that overnight swing position, but you have to watch what the market is doing. You need that close below the 100-day moving average, and you'd like to see GM preserving its relative weakness. If you do that, you're going to have a nice trade. Thanks so much for watching, everyone. Sorry I haven't been able to post much in the last few weeks. I'm really working on a lot of projects right now. I've got a lot of irons in the fire. Be excited to tell you about all the things that we're working on. So I'll try and get up as many videos as I possibly can. Trade well. We'll see you soon. Thank you for watching this YouTube video. I'm Pete Stolzers, and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.